How does an economy built on cheap money and endless debt finally unravel? Tuur Demeester joined the TFTC podcast to share his insights on an impending monetary crisis. As an early Bitcoin investor and macro analyst who correctly predicted the 2008 financial crisis, Tuur brings a unique perspective on systemic risks in our financial system. In today's discussion, we'll examine three central points: how decades of low interest rates have destabilized our economy, why a depression might already be underway, and Bitcoin's crucial role as a safe haven during this turmoil. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. The final segment reveals a surprising prediction about Bitcoin's price trajectory during this crisis. But first, let's understand how our financial system became so fragile. In this first clip, Tuur explains how artificial interest rates have created dangerous economic distortions.
That means 90% of people, they're not going to have any Bitcoin exposure. Their bond portfolio, their real estate portfolio is going to not help them. That is, I think in general, unemployment is baked into the cake because of the low interest rates. The whole economy has been skewed for decades, right? It's like Google should never have become as big as it is, or Facebook, or the social media companies, or, it should have been more the agriculture producers, the mining companies, the basic technology, the foundation of the economy has been underfunded, brutally underfunded for a long time, at the expense of all the service industries. That's going to be fixed, and in that adjustment overnight period, we need robust. I think it's going to be good. It's like when you're ill, like when you're ill is like when you focus on the basics.
What Tuur is explaining here is the first key piece of our monetary crisis thesis: how artificially low interest rates have fundamentally destabilized our entire economic system. For decades, particularly since 2008, we've been living in an experiment of perpetually cheap money. This has created a massive distortion in how capital is allocated throughout our economy. Instead of funding crucial infrastructure and productive industries, we've built an economy that prioritizes companies that make apps and social media platforms over companies that produce actual goods and resources we need to survive. At 1031, we see this firsthand when analyzing investment opportunities. The fundamental infrastructure of our economy has been completely neglected, while speculative tech ventures have received endless funding. This imbalance isn't just a minor economic hiccup, it's a structural crisis that threatens the very foundation of our financial system. Think about it like this: when the foundation of your house is crumbling, it doesn't matter how nice your furniture is. Eventually, everything comes crashing down. That's essentially what Tuur is warning about. The basic productive sectors of our economy, agriculture, mining, manufacturing, have been starved of investment for so long that we're now facing a serious structural crisis that could trigger a broader collapse. We've just seen how decades of cheap money have corrupted our economic foundations, but what's even more concerning is how this is leading to something much bigger: a potential depression that's already beginning to unfold. And while this might sound dire, understanding what comes next is crucial for protecting your wealth in the coming years.
Probably both, Trump derangement, depression, and I do think so. I think isn't it kind of already here? Like all these people that are they're stunned. They're like, hey, but I am doing all the things I'm supposed to do. I have a job. I have a little side job, and I can't pay the bills. Like, isn't that kind of the definition of a depression? I don't know. Maybe it's just the beginning. It's weird, right? Because it's not going to be that for everybody, but for a certain cohort of people, yeah, things are going to be tough economically. And in a way, because everybody has to change into the new paradigm. It's only once we all change into the new paradigm that we can have a new era of prosperity.
This second clip directly addresses the next critical component of our thesis: the likelihood of a major depression or financial reset. Tuur is painting a picture of something much more complex than traditional economic downturns. He's pointing out that we're already seeing early signs of a depression, but it's manifesting differently than what we've seen historically. The classic image of a depression is breadlines and widespread unemployment, but what we're seeing now is perhaps more insidious: people working multiple jobs and still barely making ends meet. This is sometimes called the silent depression, and where on paper everything looks fine, But in reality, people are struggling more than ever.
Everyone knows about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. Get a 20,000 sat welcome bonus. Go sign up now at foldapp.com/Marty.
The really interesting part here is when Tuur talks about the new paradigm. He's suggesting that we're not just going through a typical economic cycle, we're experiencing a fundamental shift in how our entire economic system works. This isn't just about a temporary downturn. It's about the transition from one economic era to another. Think of it like the shift from the agricultural age to the industrial age. It's that significant. And this ties directly back to our thesis about the monetary crisis. We're not just facing a typical recession, we're facing a complete restructuring of the global financial system. We've now seen how our economy has been destabilized by cheap money and how this is leading to a depression unlike anything we've seen before. But here's where things get really interesting. In our final segment, Tuur explains why Bitcoin might be the most important safe haven asset during this period of unprecedented change. Stay tuned, because understanding this final piece could be crucial for navigating the financial turbulence ahead.
I still think it's going to be an incredible bull market. I really, really think so. Because there is so much lawlessness and uncertainty and decay, and it's like, then you appreciate even more the thing that always, every 10 minutes, new block that is so reliable, that is absolutely scarce. So yeah, I really think it's going to be a big rally. But I think people want to know, like, are we going to hypercharge inflation in this, the next 4 years? Is Trump going to print like crazy, or is there going to be some kind of crash and then we'll deal with that?
In this final clip, Tuur brings our monetary crisis thesis full circle by explaining how Bitcoin serves as a crucial safe haven during this period of instability and reset. When he talks about the upcoming bull market in Bitcoin, he's not just making a simple price prediction, he's describing how Bitcoin's fundamental properties become increasingly valuable as traditional financial systems become more unstable. Think about what he's highlighting. Every 10 minutes, without fail, Bitcoin produces a new block. In a world where everything from government policies to financial institutions seems to be breaking down or becoming unreliable, this kind of predictability and absolute scarcity becomes incredibly valuable. What's particularly fascinating about this perspective is how it directly addresses our thesis about the coming financial reset. Tuur is pointing out that investors are currently caught in a state of uncertainty. They can see the problems in the current system that we discussed in our first two segments, but they're waiting to see how things play out with inflation and government policy. Will we see massive money printing under a new administration? Will we face a deflationary crash? These are the questions keeping investors on the sidelines. But here's the key insight. Regardless of which scenario plays out, Bitcoin's properties remain unchanged. Its scarcity isn't affected by government policy, its issuance schedule isn't altered by inflation rates, and its function isn't impaired by market crashes. This is precisely why Bitcoin serves as a unique safe haven during times of crisis. Most traditional safe haven assets are still tied to the same system that's in crisis. Gold requires trust and custodians, government bonds depend on state solvency, and real estate needs a functioning legal system. Bitcoin, on the other hand, operates independently of these systems. When Tuur describes the potential for a big rally, he's really talking about the moment when this realization becomes widespread, when people understand that in a world of increasing uncertainty, where our economic foundations are crumbling and a depression is unfolding, Bitcoin's reliability and scarcity become more valuable than ever. This is the culmination of our thesis. As the traditional financial system continues to destabilize, Bitcoin emerges not just as an alternative investment, but as a crucial safe haven for preserving wealth through this historic transition. Will this monetary crisis lead to the greatest wealth transfer in history? Let me know in the comments. I read every single one. And if you found this breakdown of the coming financial crisis interesting, you'll want to watch our analysis of why DeFi's complexity is a dangerous distraction. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.